Feel the music today, guys. Feel the music. Welcome. Welcome to today's live stream. My name is John. I'm the Senior Market Analyst here at 𝖢𝖤𝖣yiy. Welcome to the live stream. It's Thursday, the 20th of March. Nearly another month over. Can we believe it? Another month has gone by. So I hope everybody is doing well. Hope everyone has had a successful trading week. Been a slow week in the markets for myself personally. Not a huge amount of setups for me at the moment, but we are going to go through a little bit of a view of what's happened in the markets today. I'm going to take you through what's been going on in terms of the currency strength meter, how those markets have played out. And yeah, we'll go from there. Who've we got in then? We've got Vincent in. Welcome, Vincent. Hope you're doing well. Good day to you as well, Ratish. You're rocking. Yeah, I really like that intro music. I don't know if anybody else does, but whenever I put it on before I start the stream, I vibe a little. It can be a little loud though. It kind of starts slow and then kind of gets really loud. So gets me going for the stream. Hi, Harmy as well. Hope you are all doing very well today. Let me know how your trading's been this week. I hope it's been successful. Like I said, I've not really done a lot myself with regards to my strategy. There's not really been anything for me to actually bite my teeth into and get risky on. So yeah, we'll go through the markets. We'll have a little look. Maybe there was a couple of things I missed. There was definitely a couple of trades I missed. One being sort of the yen pairs, but I've been very tentative of getting involved with any kind of Japanese yen at the moment, but it is starting to kind of go again. I've been looking for silver longs. Silver price hit $33, well, just a little bit above $33. I'm just keeping my eye on this now because the 30-minute time frame has formed a bit of a double bottom pattern. So I'm just keeping my eye on that in the background because I do like the idea of being long silver. I'm just waiting to see if we start breaking back to the upside. So I'll have a little look at that in this session as well. Irfan, welcome to the stream. Hope you are doing well as well, mate. So let's get into the fun stuff then. I'm just going to change the profile so you can actually see this a little bit bigger. So I've got the two screens on the go. Hopefully that's okay. I'm just going to use a bit of a split screen today. I thought it'd be interesting for you to have the two open while we go through this little bit of analysis here. What I've got open over here is pound yen because I do want to discuss what's going on in the UK at the moment and quite interested in a potential opportunity on pound yen. So I'm going to break the market down from a fundamental approach and then we're going to go through how we can potentially look for an opportunity. So big day in the markets, big day. We had two interest rate decisions. So one of those interest rate decisions was from the Swiss National Bank. They continued to cut interest rates. They went from 50 basis points to 25 basis points. Are negative interest rates coming back for Switzerland? That's something we need to take into consideration. Swiss franc, a little bit weaker off of that data initially, but then a bit of strength come and flowed through. So we'll take a look at that as well. We did get interest rates out in China as well. They've left rates unchanged. No surprises there. Let's get to some big data then. We're going to talk about the pound. All right, talk about the UK where I am based at the moment. We can see that the claimant count changed. So think about the claimant count change as the sort of UK's version of the unemployment claims from the US, right? So you can see the US have the unemployment claims. The claimant count change is the UK's version of that, okay? And you can see that we've actually seen that rise to 44.2 thousand, okay? So 44,200, up from 2,800 previously, okay? So remember, we had two really good months from the UK of really good claimant count data. We then had the claimant count changed, combined with average earnings. So we've seen an increase in the unemployment claims. We've seen a decrease in wages, okay? unemployment rate, which I don't know why this is a yellow folder event. I think it's because, well, I don't know. I don't know why. I don't really understand the economic calendar's coding system. I think it's wrong. But anyway, 4.4%. So some significant changes here. Now, you're going to hear something a lot, okay? And that is the word stagflation. If you're interested in sort of economics, if you're interested in reading about economic news and how it impacts currency markets, this word, especially surrounding the UK, it's actually starting to become a little bit more prominent in the US as well. But this word is going to come and infiltrate all your media sources. I guarantee it. Okay. Now, what is stagflation? Okay. Now, the dictionary or the textbook definition of stagflation is a period where the economy experiences both stagnation, so that is slow or no growth, okay, and inflation with rising prices, okay, both at the same time. So what I mean by that is GDP, these are the two factors I think you should follow anyway. GDP, okay, is one of them because that shows you growth within an economy, okay, and the other one, okay, is your inflation rate, right? Now, in the UK at the moment, and I've actually got these figures here, so we don't have to try and find them here, there, and everywhere. We can just come over to my little UK economic outlook, okay? So what we have here, you can see it. On February 19th, core CPI year on year, so that is like sectors within the market that sort of excludes food and energy because they're a bit more volatile, right? They actually rose to 3.7%, up from the previous 3.2%. That is bad, okay? That is bad if you're a central banker anyway. That is not good, okay? Because it's combined with a GDP growth, which came out on March 14th, of minus 0.1%, which is down from the previous 0.4%. Now remember, the pound has been kind of flip-flopping because previous growth, which came in at 0.4%, shocked the market, and granted, the pound gained strength off the back of that. Now we've got the opposite happening. We've got GDP growth, which is coming in the minus figures, whilst the core CPI that is at 3.7%. Why is core CPI at 3.7% bad? Well, the target range of a central bank is 2%. So we're 1.7% away from the target range, which is 2%. I don't think 2% is going to be the norm anymore. I think they're going to have to raise it to 3%, but 2% is still sort of the relatively good area to be in where it comes to inflation. Core CPI year on year is at 3.7%. That is the crux of what this is, right? It is an inflation rate that is higher, but a GDP rate that continues to drive lower. So if we continue to see this, then the Bank of England is going to have a real problem on their hands, because how do they then do anything to control, the market, right? So they usually, if inflation rises, they will raise interest rates. Well, they can't do that because growth is a lot lower. Okay, so there's a very interesting dynamic going on in the UK. I think this is eventually going to force the hand of the Bank of England, and I think it's going to force the hand of focusing on the unemployment rate. Okay, so if we look at the unemployment rate, that's at 4.4%. If that rises, I think the UK is going to be in a lot of trouble, and I think the Bank of England are going to have to prioritise one or the other. I think they'll prioritise unemployment, and I think they will decrease interest rates a lot more aggressively. Okay, so that being said, right, if they do decrease interest rates aggressively, what happens to the pound? Okay, so when a central bank decreases interest rates, what you typically see is a weaker currency. Okay, So that's why I'm very, very interested now in seeing how the Bank of England walks this tightrope that they're on, because you've got all these kind of figures here now starting to point to a little bit more bearishness. Okay, when we look at the change table here, we can see that the UK actually went from being very bullish to very bearish quite quickly. We've got a lot of red on this board now. The only things that are positive really is that hedge funds are still buying. They're still buying at the moment. So that's quite interesting to me. Hedge funds are buying despite all this weaker economic data. And that's probably because rates are still technically being kept at higher levels. Okay. So the reason why I'm looking at pound yen is because Japan are doing the opposite. They're looking to hike interest rates. So if that's the case, could pound yen start to drive lower again? Now, I did talk about yen in the past. We've talked about the commitment of trader report showing us that there's a very strong historical buy on the hedge fund side of things, which made me think that we need to be a little bit cautious with buying aggressively the Japanese yen. And it has led to sort of 3 or 4 weeks of pullback, right? But we're at this key level, this 195 handle. I think one or two things might happen here. I think if we push 195s again and fail, okay, so if I go to the daily chart and we have a look at this setup here, we can see that we're like kind of trending back to the upside. You've got these kind of higher lows going on. We've come back up into that resistance level now. If we go and test it again, which is probably likely, then and we fail, let's say we try and break 195 but we fail, close below, I think that's going to be my idea to start looking to sell this market, okay, because I like the idea of that potential coming off. If we break 195, then we're looking at a pound yen price that is going to probably trade back towards these kind of 199s. But either way, I think there's going to be a point where this weakness that we're seeing in the Japanese yen at the moment, I think there's going to be a point where that really overturns again, and we're going to see another drive to the downside. So either way, I quite like the idea of being short pound yen. I just need to wait for the conditions to line up for me to do that, okay? And when the conditions are correct, then I'll go short it. I did bail out of my Kiwi yen position. I actually got stopped on my trailing stop. So my trailing stop was moved up to this low here, okay? So on the live stream on Tuesday, I talked about the potential for the market to try and push back to the upside and go and test the highs again. I think we were looking at the 4-hour time frame. Now, we were just kind of holding. Nothing really happened. So I was a bit like, oh, I don't like this price action at the moment. So I basically moved my stop loss below that swing low there, and yeah, I got taken out. And I mean, it has moved against me in a very big way now. So I don't think I want to necessarily be looking at this aggressive long here. It turns out that 87 area was that area of resistance. I thought that it would probably breach that. If we could close above it, then I was looking for further upside on this market. But yeah, that hasn't worked out in terms of, it hasn't broken further, but this was a great trade nonetheless. You know, it was a 3-hour trade. I took a lot of capital out at that high there. I just moved my stop loss. So very, very successful trade in the end. But that's my kind of only, is it my only trade this week? Let me look at my terminal. I've got a Euro Oz position at the moment as well. And that's my only 2 trades of this week have been a Euro Kiwi yen long and a Euro Oz long. So those are my only 2 trades. I did want to get Aussie Swiss short, but I didn't get the entry that I wanted. So correlations being correlations, I wanted to buy Euro Oz essentially. So I'm long Euro Aussie currently. I just went long on the S&P 500 on the 15-minute candles, and it's going great, except expecting one leg up for a pullback on the daily. Yeah, interesting to see what's going on in terms of the US side of things. I think if we just go here, click US dollar today, apply filter. Look, we've got some decent data, right? Unemployment claims came in slightly higher today. I need to actually update my economic indicator for the US. What else did we have? Existing home sales, pretty good, 4.26, a bit up from the previous, means there's still demand in the sort of housing market there. CB leading index came in a little bit lower. So in general, not bad of data coming out. I think with the S&P 500, what you really want to be looking for at the moment is your volatility index. What is the volatility index doing? And you can see that we're actually breaching that 20 level now. Okay, so looking at the sort of breach of that makes me want to potentially buy the stock market. You know, I think if we can comfortably trade below here, so we're going into the US Open in about 10 minutes or so. If we stay below the 20 today, I think that could then be our sort of move back into the stock indices, and we'll probably see a little bit more sort of risk on. But it's a weird day, really, because you've got the volatility index coming in lower, but you've got risk currencies like the Aussie and the Kiwi really losing ground. And then you've also got the Japanese yen strengthening as well against those currencies. Against the dollar, not so much, though. If we look at dollar yen, it's actually not really going anywhere at the moment against the US dollar. So that's also something just to kind of point out. But yeah, I do quite like the idea that if the volatility index keeps going below 20, I'm happy to look for potential upside on stock markets if we can get that solid close. I think if we don't get the solid close and see what happens today, you know, otherwise I think we might trade a little bit higher, perhaps back up into that 5,800 sort of level on the stock market. But this here is kind of, you know, it's a tricky little pullback to look into. You know, I like the fact that we've got this kind of little 4-hour trend going on, but at the same time, I'm not fully confident to buy into that market yet. I want to see that VIX close. So have a quick flick onto the NASDAQ. You know, with the NASDAQ, I can see that I like the idea of maybe price breaking back into these lows first before then looking for significant opportunities to buy the stock market again. So I'll keep my eye on it and see what happens. But for now, I think that we've got, you know, a little bit of a resistance ahead of me right now. With euro and pound both strong-ish, how did you decide on Euro or pounds that would be better to trade? Honestly, I just kind of looked at my strength and weakness chart here, okay, and euro and pound are both very strong currencies, okay. That is backed up by what's going on the commitment of trader reports, okay. So if we have a look at currencies here, we can see that, you know, pound, they've increased their contracts by plus 10,000. If we look at euro, though, they've increased their contracts by 23,196. And I think that the euro has a little bit more like stimulus backing it rather than the UK at the moment. Plus, when we look at the data for the week ahead, the UK had key data out. So the euro doesn't really have a lot of data out this week. So I was more focused on euro Oz to the upside. But that being said, you know, let's go take a look. Pound Aussie has outperformed euro Oz, right, by a long way. We came back into those lows there. Look at the 4-hour chart, came back into that zone. Okay, if this was if I traded pound Oz instead of euro Oz, I would have already been at TP1. You know, that would have been my target 1 in there, and then I'd be looking for higher targets. And I did actually look at this at the time. You know, we were looking at this kind of breakout situation, but I didn't take the trade. I was opted for euro Aussie instead, and look, market has rallied up. So that's just something that happens sometimes. I chose euro Aussie over pound Aussie, and this one outperformed that one. So I can't really do anything about that at the minute. Just got to see how, you know, how Euro Aussie plays out. Still technically, you know, still liking what's going on Euro Oz, not as much as obviously Pound Aussie because it would have hit TP1. But if we go take a look at Euro Oz, you know, I always ask myself, has the conditions changed when I'm in a trade? Because you get all the data, or you get continual new data. I always ask myself, has the conditions changed here for me to want to not trade this scenario? And no, not really. You know, I like the idea of still seeing Euro Oz punch higher. So if I look at what's happened, the daily chart was in that secondary phase. When I go to the 4-hour chart here, I can see that we've tried to break these highs here. We're just getting a bit stuck at that point. We've pulled back, but we have technically made a new high. I would love to have seen that close above, because that would have been perfect for me. It hasn't, it's failed, so it's not fantastic. But at the moment, there's still nothing here to suggest that this can't continue to push back towards the 174. I think if we start to see kind of the market bail out and bail below that kind of 171 handle, then, you know, I have to accept that that's the risk and I'm wrong at that point, right? But at the moment, nothing really has changed for me here in terms of how the market is shaping up. So until that happens, you know, I can't really make a choice in it. Yes, that fail in that 4-hour high isn't fantastic. You know, if I go down to the lower time frame, maybe I can monitor it on like a 30-minute time frame or something, because I know that if we break this trend here, so essentially if we break either this low or this low, the likelihood of price coming back to the upside is very low. Okay, so if we take these lows out, then I'm probably going to exit the position and see what happens from there. But I'll get out for a smaller loss essentially. But yeah, there was no real kind of move behind it. If anything, I liked this kind of 4-hour trend line that got broken. So, you know, I liked that. When I go look at Pound Aussie, okay, the retracement there was a lot deeper. Okay, so it was harder for me to kind of find a good sort of breakout point. Don't get me wrong, I like that support there, and price found that and we rallied. So, you know, in hindsight, you know, hindsight's great, isn't it? Because everyone's a good hindsight trader, but, you know, are they a good trader on the day? And, you know, unfortunately, this one's took off. Euro Aussie hasn't. I'm just in Euro Aussie, so we'll see what happens there. Even I was conflicted about Euro, so I just split my risk and traded both. Perfect. Maybe I should have done the same, Vikram, to be honest. Maybe I should have done the same. Good idea. Hello there, Emeka. What are you going to do about XUUSD? Is that gold? I think you might be on about gold there. XAU. I'm not doing anything with gold, to be honest. I think gold prices are overvalued, in my opinion. I think that I don't really want to trade that opportunity there. I like silver a lot, so I'm going to be looking to buy silver again if we get an opportunity. We're in that secondary phase now. Looking at the 30-minute time frame here, is the market still in a downtrend? Yes. This is that kind of double bottom I was talking about. If that breaks trend, right, and we break these highs and close above, you know, I'll possibly look for a long entry on silver after we come back into this sort of $33 was my kind of preference point. This kind of support zone, you can see that we've kind of wicked into that now, and we've found that support in here. You know, looking at, again, just kind of looking at the COT reports, you know, you can see that they've actually decreased their positions in gold but increased their positions in silver. And that is interesting to me because of where the gold silver ratio lies at the moment. So the gold silver ratio is basically gold prices versus silver prices, or gold prices divided by silver prices. And when they reach a significant high, we usually see quite a bullish move in silver. Just to kind of show you that. And this is a great tool to use. If you trade gold or silver, you should be looking at the gold-silver ratio, because it's going to give you some decent sort of opportunities. I'm going to pin the new scale to the right there. Let me just open this up a little bit. What you're going to see is when the gold-silver ratio reaches highs, right, you get these kind of moments, right? Reached a high point there. These lows in silver reached a high point here. These lows in silver reached a high point here. That was a low in silver. Reached a high point here. That was a low in silver. So you can see how you can use this as your kind of sentiment chart going into either trading with gold or silver. And it'll be the opposite side. So you can see when it's kind of low, you can see that we've got a top in the market. Okay, this low here, top in the market. This low here, top in the market. Okay, and we're not there at the moment. I think if we breach these highs, these high 90s, and we go up towards, like, you know, that high there, or even if we get anywhere near the 2020 highs, then I think silver's going to probably fly at those points. But yeah, keeping an eye on the gold silver ratio. I mean, you could probably do the same as well if you just compare gold. Okay, I use it more for silver than I do for gold, because gold is kind of on its own sort of, you know, planet at the moment. But it just kind of works more in the opposite way. When you have a low gold silver ratio, you know, that can lead to the market kind of rallying a little bit. But at the moment, I think, you know, gold is just absolutely sort of rampant, you know. Get that kind of move in there. So yeah, I just feel like using correlations, I've got a better risk reward ratio on silver than I have on gold, simply because when I look at silver prices and I just go up to the monthly time frame, I've got places to target, you know. And as a trader, that's nice, you know, because otherwise on gold, you're kind of guessing, really. You've either got to go for your previous swing highs after a pullback, or you've got to continue to try and go for psychological levels, right? You got to go for, like, now it's at $3,000. Is it $3,500? Is it $4,000? You know. So yeah, I'm looking to kind of target these levels when it comes to those silver prices. Sorry, yeah, Tamil. Good afternoon, Rai Guy. Hope you're well. Tamil, Euro Kiwi, please. Yeah, let's have a look at Euro Kiwi. This market's probably rallying as well with that Kiwi downside. You know, looking at the daily chart, yeah, this is a market I'm interested in as well. You know, I'm in long Euro Aussie, so Euro Kiwi is probably less on my radar, just because of that, plus the fact that there's a significant commitment of trader report signal on New Zealand dollar. But yeah, this has done the exact same thing, right? Double bottomed, broke trend. If that price pulls back, can you see an extension higher? You know, one thing that I will be looking for right now is my 30-minute time frame, or even the hourly time frame, because what we should see is lower lows and lower highs. Okay, when that changes, when that condition changes, that means that the 4-hour could start going back into a primary phase, and that's where I want to start buying, okay, on that kind of break of that new high. So you might see price come down to this kind of level here. You can see we've had a strong rally, consolidation, strong rally. So we might see just like a pullback into that zone there. Wait for that change of trend, and then maybe we'll be onto something with Euro Kiwi. My only problem with trading Euro Kiwi is the COT reports, to be honest. You know, if I just put that back over here, side by side it, when you look at what's going on in terms of Kiwi, so they have increased their positions here. So what they've done is, if you look at the short positions column, they have increased their short positions, right? Or sorry, decreased their short positions by 4,395. and decrease their long positions as well. So you can see the difference is positive 2,834. If I just go to the detailed review, you can see that the contracts were at the lowest levels in a 52-week period at minus 55,000. We're now at minus 52,000. When I look at New Zealand dollar on a chart, and we open this up and just pop the large speculators on, you can see that hedge funds are at these real lows. Now, usually that, in my opinion anyway, in my theory of trading with commitment of trader reports, to me that means they have reached an extreme, and that we can often see that reflected in a reversal in price. It does not mean that price is just going to shoot off. We never dictate how far that move could be, but it just makes me cautious, because if they start decreasing short positions, what is going to happen to price? Are we going to start seeing price up towards kind of 6,000? Is it going to be up to 62,000 before seeing the continuation? Or is this a good spot? Is that a good spot for New Zealand dollar to continue lower, right? From a fundamental point of view, Kiwi's not in a great place. They've got higher unemployment levels. They've also got the situation that they're a big trading partner with China. China's not really growing at the moment. But if that changes, I think Kiwi could do quite well. But also we can see we're kind of trading below that 5,800 handle. And if we stay below 5,800, New Zealand dollar could sell off. Okay, but this just scares me a little, because when you look back over history, so these go to 1999, and since 1999 this is the lowest level hedge funds have been ever. And you can see whenever we get these kind of significant lows, we can see pullbacks in price, right? Significant low here, pullback in price, significant low here, ever so slightly pullback. So you can see, even though I would say that was an extreme in 2022, prices still fell a decent way before seeing any kind of rebound. So just because they are at these historical levels, it doesn't mean that price can't move lower. I just become a little bit more cautious with regards to risk at that point. What do you think of yen Swiss? Yes, I still quite like Swiss yen downside, to be honest. This market to me is something that we've been kind of, again, it's been a good market to trade throughout the year. We've come up into another sort of interesting spot, haven't we? This previous sort of, high there on the daily chart, that 170.50 has failed there. We're pushing back to the downside. Yeah, I like this market short, to be honest. I'm just going to wait for a pullback. If we've still got the Swiss National Bank cutting interest rates, then why can't we see a Swiss yen that continues lower? I mean, wild swings here in the market. So wait for a little bit of a pullback, and then I'll look to try and maybe capitalize on something here, because we are seeing that Swiss franc sort of weakness coming through. When you look at Euro Swissy, it's had a bit of a choppy day. CAD Swiss is up, right? CAD's been a weaker currency at the moment, but still it's up. If you look at Pound Swiss, it's up. Euro Swiss is up. The only two really that it's not up against is Kiwi and the Australian dollar, which are being battered today. Are being absolutely battered. So yeah, still like Swiss yen short. Thank you. You're welcome. You're welcome. But yeah, Vikram, this is still going in my head, so I should have traded both. I could have split my risk. But we shall see. I'm still quite happy with the EURUSD position at the moment. So we shall see. Let's go take a look at what's going on in the Dixie then. We are starting to see a little bit of upside. That's reflected in euro dollar. You can see that euro dollar kind of ranging up towards this 1.09 handle as well. Okay. And euro is one of the one of the stronger currencies at the moment. It's the one that only kind of really changed things on the currency strength meter. So these are the currency pairs that I was looking at going into this trading week, right? There was only a few of those that I felt were decent enough to trade, right? But yes, EuroCAD. Let's see how EuroCAD's done. So I'm looking at potential EuroCAD longs this week. That hasn't really played out. Look at the weekly chart. Market is very bullish there. Last week's close went below the previous week's close. Very strong bullish move there. So wasn't really bothered about that one. I don't know if a EuroCAD was on my list to buy. Yeah, it was. It's on the list to buy there on the heat map, but nothing's come of it. If I look at the daily chart, we're pulling back. There's nothing for me to do. Maybe this area here would be quite interesting. But look at the 4 hour. It's just creating this downward trend. No reason to buy that market at the minute. So EuroCAD was on the radar to be a buyer. What else did we have? Euro, pound, US dollar, but they were at key levels. Dollar, yen as well. Aussie yen. Aussie yen was one to short. Now, if we look at Aussie yen, we have seen that sell off, right? We have seen that sell off. I haven't taken any trade on this. I was looking at this kind of move up, and I just haven't traded this downside move. I think looking back, if I was to trade this, I would like to have maybe not seen this sort of break of that high. That would have been nice to kind of, remain like that. But at the end of the day, we've had this kind of pullback into this area here, into that area of resistance around that 95 handle, and we did get a rejection. And if you look at the 4 hour chart, actually, let's go hourly just because we can see it better. We got into this zone here, and the market created a low, new lower low. That would have been my usual sort of signal to short the market. But yeah, I didn't take that position. I would have been short around 94.50, stop losses above the highs, leaving this one to see if it could trade a little bit lower. But yeah, not involved with that now. So we shall see how that one continues to play out. Would have probably tried to target down towards 92.35s on that one. What do you think of dollar Swiss? I'm looking to get involved in longs after seeing the candlestick. Yeah, I've not looked at dollar Swiss since I traded that at the start of the week. Yeah, I forgot about that one actually. Monday I took a trade short on dollar Swiss. Yeah, that's completely kind of changed, hasn't it? Market has rallied and broken through into new highs on the daily chart. Sorry, on the hourly chart. I mean, yeah, I can see this kind of pulling back a little bit, back up into towards sort of the 89.50s, maybe up into the 9s. So, yeah, I don't mind that one. I quite like that kind of breakout there. Let's have a look at the 4 hour chart. Yeah, you've got that kind of break in sort of trend here. Yeah, I don't mind that. Don't mind that. Maybe like if you look for a pullback, again, just kind of look for that secondary phase in the market turning into the primary phase down towards a low. Don't mind that at all. It's just interesting to see if we do get this kind of reversal in the market, because if I look at the sort of reversals that we could look at, euro, potentially pound, CAD, yen, right, because they're at very strong levels. So usually you can see why I've highlighted these in yellow for two reasons. Well, one reason. So if you come down to the area down here, I'll put a little key here. So I question the reversal at that point, because it tells me that these markets have gone a significant way. Okay, doesn't mean that they are going to reverse. It just means that maybe they can reverse at some point. So looking at dollar Swiss wasn't necessarily on my reversal cards. It's still sort of looking for that downside play at the moment. So, you know, if I was still sticking on the side of the currency strength meter, I'd probably be looking to short here. You know, if markets got up into this level and I saw a 30-minute change of trend, I'd probably be looking to short that, to be honest. So we'll see. We'll see if it breaks through those highs and continues higher. But I don't mind that, like, there's like a short-term trade back to the upside. But yeah, euro, yen, you know, the yens against the Aussie, CAD, and dollar are the ones that I really wanted to have a look at. Let's have a look at dollar yen, because I just don't. Yeah, I mean, look at that sort of pullback that we've had. This is a weekly chart. Let me take off those candles there, those trend lines. Look at that sort of pullback. It's not a great pullback, is it? I think maybe if we had like a big momentum push, you know, I do like the idea of selling dollar yen again, but do I want to do it here? You know, I want to do it a little bit higher up. The only problem we've got is the US bond yields. Let's go take a look at the 10 years. And I'm just going to add that to compare. So usually dollar yen follows the US 10-year bond yields quite closely. And they're starting to push lower again at the moment. So that's not great if I want to try and sell at a higher price, because I essentially want to be greedy, right? I want yields to move higher so that I can sell dollar yen at a higher price. But we're not getting that at the moment. I think if yields break through these lows here and continues down, I think dollar yen will follow that path. I think we'll be down towards those kind of new lows there. We'll just pop that on regular and move this to a new scale. So, you know, if we see bond yields break those 4.2% lows, and then I think, you know, dollar yen will probably be trading down towards 145. It'll probably go towards 145. So I'm keeping an eye on it. If possible, please, New Zealand. Yeah, so New Zealand dollar as well, just rejecting that 58 handle in the end. You know, I think if I wanted the commitment of trader signal to play out, I would have wanted this to have closed above that 58 handle. It hasn't, you know, and it looks quite concrete that it's not going to. I think unless we get some big switch tomorrow. Is there data out of Kiwi tomorrow? Let's have a look. Was it today or was it? Let's have a look at this week. Was that last week? This week. I'm pretty sure there was some New Zealand GDP data. Oh, here we go. So GDP quarter on quarter is actually pretty good. It's actually pretty good. Actually rose to 0.7%, down up from 1.1%. So we actually had some decent numbers in terms of Kiwi's GDP. So I guess that kind of shocked the markets. Current account not that great. So this is basically the difference between imported and exported goods, and they are not in surplus. So look, are they ever in surplus though? Because they're an exporting nation. No, but I mean, since 2021, it's been quite negative there. Okay, can't close that down for some reason. But GDP was a bit better. Coming out of that negative territory anyway, you know. 2 previous quarters of negative, which has been pretty bad. You know, September 2024, revised lower. And I mean, look at September 2024. You know, that's where we had this big downside in the market. Not just because of GDP, because of obviously the US dollar as well. Got really strong at that point. And it just pushed those commodity prices lower as well. And we know that Kiwi is a commodity nation. So yeah, I mean, quite a tricky week. Let's go have a look at what the stock markets are doing then. Let's have a quick flick over to the futures market. We're actually seeing a little bit of an increase in the futures. S&P 500 pushing higher at the moment as well. So a lot of green on the board there. We're seeing that the volatility index is starting to drive lower, which is something that, like I said, if we can stay below 20, that's usually pretty positive for stock markets. And if we do, could that flow into other markets as well? But I think at the moment, if we stay below 20, I'm more inclined to be a buyer of this market. You know, looking at the weekly chart. Dow's starting to push back into this range as well, which is quite nice. Let's have a look at the Russell, because the Russell has been beaten up bad recently. So yeah, DAX is still high. FTSE also rejecting those weekly highs last week. So yeah, keep an eye on the volatility index. I think that's going to give us a big tell of what goes on. You know, look at that hourly chart, just racing higher. No worries, Ratush. Good to see you. Hope you're doing well, and have a good rest of your day and your weekend. And I'll hopefully catch you next week. But this kind of sentiment in the market now could drive other currencies higher. You know, we might actually see a little bit of a rebound on Aussie and Kiwi. They are down quite a bit today. And usually if you see risk on coming into the markets, usually these currencies can perform pretty well over the likes of the euro and the pound. But pound is pound's had a weird day, hasn't it? Just recovering that 129, 129.60 area. Obviously, a lot of buying going on here on pound down towards these lows here. So whether that'll be sustained or not going forward would be quite interesting to see. Just keeping an eye on silver. So I've got 10 minutes till that closes. So I'll be keeping an eye on that. See if we can get a little bit of a breakout on that one. That's a good question, Vincent. I think I still don't mind the long. Don't get me wrong. I actually don't mind the long. You know, if we go take a look at it. I can get rid of this now. Now, if I look at it from a point of view of technical combined with that little fundamental move, you know, we had that double bottom. Price broke the double bottom. We're just testing that neckline. So from a conditions point of view, we've made a new high, technically, right? If it beats that high, is this going to be a high or low? That's the question, right? Is that going to be a high or low? And one thing that we can do to help us with that decision is use those lower time frames and those lower time frame change of trends. I actually think if you see the stock market rally, then Kiwi yen should push back to the upside here. So what we can do is just kind of wait, sit on our hands. If price kind of comes up, back in, breaks trend, right, makes a new high, then yeah, I'll be looking to buy back into this one. That's how we traded this move down in here, right? Market was pulling back, broke out a trend at the 84.50s, closed above, market went in our favor. Now we're back at this support zone around that 85 handle. Could we get a double bottom breakout? Okay, so the beauty about the downside of swing trading is you've got to be patient, but the beauty about swing trading is it gives you more information if you just wait and you just chill, see if we get any kind of, you know, move there. It's like I'm looking at silver prices right now. If it doesn't give me the close above those highs in 30, you know, the 30-minute close, so what? You know, we'll wait, see if it, because then you're going to get more information. That's what I love about it. You get more information. So if we do see this here, right? So if I don't get the close there above those highs, maybe price is actually going to come a little bit closer to 33. And then if I do get that swing, then I've got a better price anyway, getting in at a cheaper price. So we shall see. But yeah, I'll just let this develop now. Not really focused on too much. The only one I'm in is EURUSD now at the moment. Starting to kind of give a little bit back there right now. It's failing those 4-hour highs. So I'll just keep an eye on this. I think if this breaks these lows here and closes below, then I'm probably wrong at that point. So if I'm wrong there and I get a close below this low, I'll just take a small loss on that and call it a week probably at that point. Okay then, guys. Right. I'm going to leave it there. Thank you to everybody that joined. I hope you all have a sensational weekend. If you enjoyed the stream and you learned something new and you know you've enjoyed your time here, then leave a like and subscribe if you're new. But yeah, thank you to everyone that joined today. I appreciate you all, and hopefully I will speak to you all very, very soon. If US 500 breaks, the term will be bullish, close, change or trend. Yeah, so yeah, just kind of looking at that. I think if we kind of break through the 50, the 58s, you know, you're kind of back within that sort of bullish range there. So, you know, back above the 58, I think would be a change of sentiment. You know, if the market can kind of reclaim that area, you know, maybe we'll see a move back to the upside. But again, just kind of focus on that VIX. You know, kind of focused on that VIX. We're very much at the edge of volatility again. If it can break below 20, close below 20, then I think we're going to see some more upside on terms of risk. So I'm going to leave it there, guys. Thank you for joining me, and I will speak to you all very, very soon. Like I said, if you can, leave the stream a like. I'd appreciate that. And if you are new and you're here for your first time, please subscribe. Cheers, guys.